Good morning, everybody. Welcome to the Investing Bros. We've got a great show lined up for you guys today. But the two big stories of the day, starting off with CPI data coming out just about 30 minutes ago, coming out higher than expected. Some people say 3.5 was the expectation. Some people say 3.6, but it came out at 3.7, so higher than expectation. And at first, Bitcoin responded a little negatively, but it doesn't seem to be that bad right now. We will take a look at that later on during the technical analysis section. The other big story of the day is that the CEO of Binance.us steps away. He leaves his post. This is really, really big. We're going to talk about that in the first portion of the show. So don't go anywhere. We got a lot of other stories, some big hitters today. We got a lot to get through. So if you guys are ready, go ahead and strap on in, get your morning drink, get your breakfast, hit the like button. If you are new here, thank you so much for joining us. Please consider hitting that subscribe button. And with that said, we're going to jump in. But first, I do need to introduce my co-host this morning, and we're going to have to read this super chat here in just a second. But first, T-Shroom from down in Florida. How are you feeling this morning, my friend?
Better than I deserve. My sickness is gone, but there's something going on with my stomach. So it's still a little bit of stomach pain, but we're pushing through, and we're having fun. I've got a great quote of the day here for us, guys. It's comes from a U.S. president. Maybe you've heard of him, Ronald Reagan. He said, "There's no limit to the amount of good you can do if you don't care who gets the credit." Tim, what do you think about that quote there?
This is very true. I'm a big proponent. Listen, no matter what people think, this show is not about sports ball, but I'm a big fan of sports ball. And one of the reasons why is because I do attribute a lot of things that I've developed and the person I've become from playing sports as a child. I think especially team sport, it teaches you to have to operate. Like when I was younger, I was that ball hog. I was the kid who wanted to do everything myself. We won some games and we lost some games. But as I got into high school, I learned I've got to elevate the people around me as well. Otherwise, we're going to lose games. So it teaches you to operate as a unit. It teaches you, celebrate when you do well, but you celebrate even harder when those around you do well. And it teaches you a lot of character to be able to say, hey, listen, I want to win no matter what, even if it's not me. So I'm a big fan of kids getting involved there. And I love that quote. And it's really big. Here on this channel, even I just want to see people succeed, whether people hear from us and they get some great information from the Investing Bros, or if they watch us and other channels and they get some great stuff from them. I am not about people just watching Investing Bros and not watching anyone else. I want every single one of you watching right now to find that financial freedom that you have been craving, to be able to live your life the way you want to, and then help those around you as well. So whatever it takes to get that done, I am all about it. What about you, T-Shroom?
Yes. Yeah. I agree with that. I definitely agree with that. And Ronald Reagan, is a controversial figure to some, but he's got some good quotes. Yeah. He's got some real bangers. That's for sure.
I feel like most people in life that accomplished anything of significance could be called controversial figures, because you're always going to have someone who likes them and dislikes them.
Yeah. Especially U.S. presidents.
I'm trying. Yeah, I can't think of a single person that has accomplished something big that doesn't come along with their haters as well. So,
it's true, especially nowadays. Because I was going to say George Washington.
No, even George Washington.
Now he's got some haters.
It's true. Well, to be fair, the whole country of England hated him even back in the day. So,
They don't count, though.
Okay. Gosh, that was rough. We're starting this morning off throwing shots at England already. We usually wait until the second half hour for that.
Sorry, Cryptex.
Goodness gracious.
Wrong side of history. What can I say?
We're gonna jump in here, guys. I had a great morning. So I've been doing some of my workouts in the afternoons, T-Shroom, but those really suck. First of all, you're tired from the long day of work, especially my last couple of weeks have been very exhausting. And then I also have a 3-month-old at home who it's really hard to do that. So this morning I went back, I woke up at 5 a.m., got in my lift, and I'm feeling good. It doesn't necessarily feel good to wake up at 5 a.m., but once you're up and you're lifting the weights, it's all good from there. Okay. And now I'm fine. Did you get your morning workout in, or are you waiting for afternoon?
Definitely waiting for the afternoon. But
what a guy.
When you said got my lift, I thought you meant you got like you're taking a lift to work now, like a Uber. But you meant like lift, like pompe de muscles lift.
Yeah.
I like that. That's a better lift.
Let's just be safe here, T-Shroom. If you ever hear me talking about lifts from here on out, just go ahead and assume I don't take I think I've ridden in an Uber once in my life. I've never ridden in a Lyft. If I say the word lift, we're talking about weights and working out. We're just going to go ahead and start there. Let's read some super chats here, though, and we're going to move into our economic data. And the economic data is big today because that is the CPI stuff.
Huge.
But Remington Peralt says, read my name, Tim. LOL. God bless the bros. Thank you so much, Remington Peralt. And of course, that is with that red badge. That means he's been a member for 2 months now. Love to see it. Crypto Trades also using his membership comment. Said, today I'm grateful for all of you. We joke around, but at the end, we all want what's best for each other. This community wants to see everyone succeed. Say my name, Tim. Crypto MF Trades. Okay. Don't get banned. Yeah, don't get banned, Crypto Trades. Love you. Love everybody here. Again, let's get that the new rule. 100 likes by the end of the stream, and we will do some name reading at the end of the show. But let's get in here, T-Stream. Go ahead and share my screen, and let's take a look. Starting off big this morning. Let me zoom in even a little bit more here. Before we even got the CPI data, 7 a.m. this morning, we got our 30-year mortgage rates coming in at 7.27, wow. Previously 7.21. So it continues to be rough on young home buyers right now. Don't buy a home right now. This will come down eventually. Probably not for good reasons, but it will.
Eventually.
Now we move into the important stuff. Now, this is where, you kind of split hairs on what's important here. A lot of people like to pay attention to this one right here. Inflation rate year over year. It came in at 3.7. Previously, last month, this is year over year, was at 3.2. The consensus was 3.6, the forecast 3.5. So question which one was expected there. You could go with either one of them. I've seen people say the expectation was 3.6. Seen people say 3.5. Either way, it was higher than both of them, coming in at 3.7. And so that is something that is going to be interesting. Again, Bitcoin not plummeting on this news that is higher than expected, but it's something that's going to be interesting to watch the rest of today. Then you move over just a inflation rate month over month. Last month was 0.2%. This one came in at 0.6. That was the consensus, but the forecast was a little bit lower. So gotten higher than the forecast, but right at consensus. Moving up to core inflation, this is a little different because actually core inflation usually is a lot worse than regular inflation. Core inflation came in at 4.3, just as consensus said, lower than forecast and lower than last month at 4.7%. Core inflation month over month, 0.3%, higher than expected. Last month was 0.2%. So interesting stuff there. But usually we see core inflation come in higher than expected, and inflation, just normal CPI, come in a little bit lower, but it kind of flipped on us this time. Kind of gives us an indication of what's moving on in the future. Really quick, T-Shirt, let's go to BroCam. Usually we keep moving on here, but I want to kind of camp out on this CPI data this morning. This is a lot of stuff that people were looking at. They were highly anticipating. What are some of your thoughts about this CPI data? Does this concern you? Are you worried, or is this, kind of what you were expecting?
It does. I actually want to jump over to my screen because I do have some stuff pulled up I wanted to show just really quickly. For context, this is going back to 1915, so maybe more far than we need to go back. But you can see this is where we are. This has been the 9.1 inflation that we got down here. You can see we've been quite a bit higher than that. But let's zoom in. Let's drill into where we are today. And this is live data. This now refreshes in pretty much live, coming straight from the Bureau of Labor Statistics, baby. So we got it coming up to 3.7, which is where it is now. It has come down as low as 2.99, call it 3, and is ticked back up. So this is what we're looking at. This is the CPI. This is the overall inflation rate for the United States. There's other ones, but this one is kind of the headline, right? This is the one that the average person's looking at and making a decision based off of, if they are making any decisions based off of inflation. But there's other rates. So just a little bit of context of what we're talking about. And then what I found interesting about this is actually back over here that transport drove most of monthly CPI rise. So transport came in higher than it usually does. And then shelter is still really high, as you can see, still pretty pronounced there.
Yeah.
But it actually, I think, started to come down. But we'll get tons more of digestion and analysis about this CPI print. But right now, the big the big headline, and it does worry me, is that it's ticking back up 3.7. So it's sticky inflation. It's here to stay. It's not just gonna go right back down to 2. That's what I should have pointed out here on the chart. I know we're jerking everybody around, but this yellow line here, horizontal yellow line, that's where the Fed needs that interest rate to get back down to, so that it can continue pausing rates or even start cutting rates. Until it's down there, the Fed has said that they will not cut rates, and therefore liquidity is going to continue to be tightened. QE and QT going to be continue to be tightened and restricted, and therefore institutions and people like you and me are going to be de-incentivized to invest in risk assets like Tesla, like Microsoft, and like Bitcoin. So that's the skinny, and I am a little worried. I'm more worried than I was earlier this morning before the print, but it's not something that's having me shaking in my boots, especially seeing the initial response from the market.
Well, let's go look at some other things. Going to flip it now. Some decent news this morning. Go over to my screen here. I don't know if this is what's causing Bitcoin price to continue to hold up, but we actually, after hovering at 93% for the longest time in the CME futures predictions of if we're going to pause or not, we shot up to 97%. Now, that's not a big deal because, again, I think we were about certain about a week from today, FOMC more than likely, and this is saying 97% chance it's going to happen. They're going to pause rates, which is, again, expected. But the fact that it went up makes me curious what happens as we move along. Okay, we're staying paused in November, staying paused in December. I'm curious to see if we move up the time that we might see our first rate cut. Here's going to be the decision make. No, so it didn't necessarily change it. We're still expecting. I'm going to go ahead and assume this. Yeah, June of 2024 is still the expectation for the first rate cut. But you are seeing May pick up some more momentum, and you're seeing the added interest rate boost, the 25 basis point boost, start to decline a little more. So nothing necessarily huge, but this is, okay, just updated to 95. So it's kind of going all over the place. But the good news is, again, we're still expecting a pause because this would be the expectation, T-Shroom, is that theoretically speaking, like you were just saying, Jerome Powell and the Fed, they want inflation down to 2%. If they think, or if they have any reason to be concerned that this month's tick back to the upside is a problem, it could potentially push them to say, you know what, we need to raise one more time. But as it stands right now, I don't think we should be worried about that. I think overall, even though it came in a little bit higher, guys, it's looking like it could play out to be more of a nothing burger than actually bullish or bearish for Bitcoin's price. But let's keep moving on here. Let's go back to my screen and let's finish out our economic outlook. And then I'll let you talk about something in just a second. It sounds like you have something to say. Bitcoin. Yeah, there we go. Bitcoin kind of balanced here. So technically it's a red box this morning, guys, but you're going to notice here with there being almost $32 million worth of liquidations for Bitcoin, 14, almost 15% of them were long liquidations versus 17 million of them were short. That is pretty balanced. So that means there's a lot of volatility within a tight span and a lot of people just getting faked out, thinking that they know what's happening with a long position, and then they're getting liquidated. Then they think they know what they're doing with a short position. They're getting liquidated. It's not the time for any big moves at the moment. Same thing with Ethereum. Again, it looks red. So just looking at this, you would be like, oh, this should be a bullish day because there must be more shorts liquidated. But you're looking at it, $7.6 million of shorts versus 7 million longs. That's like 50-50 right there. It looks like most things are sitting closer to 50-50 when you're looking at their liquidations. When it comes to Trueflation, let's take a look at what that's at this morning. It ticked slightly down from yesterday's 2.7 down to 2.69%. But that's not necessarily what the CPI takes into account. Let's take a look. As expected, I'm going to imagine, we shot back up after dropping to 30 yesterday or like 2 nights ago due to the crash below 25,000. We're back up to 41 in the Bitcoin Fear and Greed Index because we're back above 26,000. Now, again, we kind of talked about that. I still don't think this is reason to be overly bullish, but it is a sign in the right direction to say, all right, we're not that high. We're still technically in the fear. I know I was talking with Kelly Kellum, a good friend of ours, and of course, partner here at Hit Network. He's going to be doing some stuff. Make sure to go watch his show after this. He's going to be talking about some on-chain data about long-term holders that are starting to show some bullish signs. So that's kind of Kelly's perspective. He's an expert there. I need to get him on the show here at some point soon, but make sure after the show is over, go watch Kelly Kellum over at BitLab Academy because he's going to do some good breakdown with the on-chain data there. Let's keep moving on and take a look at our coin market cap open though. So top 20 coins, not a lot. This morning I did see it up closer to 1%, but right now 0.25% for Bitcoin. Let's see. There are some red, a good amount of red here in the last 24 hours. XRP up 0.31. You know what? I think I was looking at 1% up for Bitcoin from the start of yesterday, not last 24 hours. So this goes back to like literally the last 24 hours. We're technically not that far up. Except for Toncoin. We're going to mention that here in just a second. Look for more information on Toncoin. I think that's one that could be an interesting one moving forward. Bitcoin Cash up 1%. The biggest loser, Stellar Lumen. So XLM down 7.63%. Now, I saw in our chat yesterday, T-Shroom, someone was like, oh, what about this big news from Stellar Lumen? It turns out, I mean, they've been hyping for a couple of weeks now, and then they released this like new website or something that was not really that impressive. So they got a big drop because they hyped themselves up a little too much and didn't deliver on all of their promises. But let's take a look at the biggest gainers here on CoinMarketCap. Compound number one up almost 11.5% here. Toncoin up 11.3%. VeChain up 7%. I do believe VeChain just got listed on Coinbase. Could be part of the reason for their uptick. Maker's doing well, up almost 4%. HBAR up 3.5%. So these are all good coins. Before I move on, T-Shroom, I know you did a little bit of digging into Toncoin, and you are liking what you're seeing. Anything you have for us right now? Is there a video coming maybe later this week or next week more on Toncoin?
Yeah, I think it's time for us to go ahead and get educated on Toncoin. I've been dropping little crumbs of what I've been finding in my research on Toncoin. Essentially, it seems like it's got a pretty teeming community of folks who have picked up a project that was initiated by Telegram developers, and then Telegram just kind of sent it off and disassociated themselves with it for obvious reasons. In crypto, what gives a lot of value to a blockchain is that there's no organization behind it, right? So the fact that there's kind of there's no app running Toncoin is a plus for it. It would have been a mistake for Telegram to hold on to it too tightly. So instead, they just kind of let it out, and I believe it's open sourced now at this point. But now what's happening is Telegram is bringing it back into the fold and saying, hey, this is going to go ahead and be kind of our Dogecoin to what Dogecoin is for X.com or previously Twitter. Yeah. So it's going to be kind of the underpinning coin there for Telegram. It could be kind of interesting.
And just in terms of price action, I remember weeks ago seeing it kind of lurking on the outside of the top 20. Then it got into the top 20. Then it got into top 15. Right now, it is ranked number 11 on CoinMarketCap. Yeah. So this coin is making a fast rise. And I look forward, T-Shroom, to more content on that one. Let's take a look at the biggest losers here. Going back to my screen. Aster is down 10%. We talked about XLM down almost 8%, again, on their kind of nothing burger news. ICP down 3.7%. Woo Network down 3%. Ape NFTs down 2.6%. Sui down 2.5%. And Curve DAO down a little as well. That will kind of wrap out. Pepe's down here as well, down 2%. That'll wrap out our CoinMarketCap open. And now we're going to move into, let's go back to Brocam here, T-Shroom. You guys know we talked about this yesterday. What we're going to start doing here, instead of jumping right into the TA, we're going to start doing the top one or two stories right after our economic open. We already talked about CPI pretty heavily, but we got another story breaking, of course, especially for our American citizens here. Binance.us, the CEO walks away. T-Shroom, yeah. What's going on with that story?
All right, guys. Yeah, let's get into the Binance.us story here. But before we do, let me show you guys something. You can join our YouTube membership program. All you got to do is click right here. 4.4 thousand subscribers right now, and we'd love for you to join. Obviously, not all of those subscribers are members, so some of you may be interested, and we want to let you know that this is even a possibility because you may not know. So what do? You click that join button. Boom. It's going to pop up this menu, right? You could pick between silver, gold, and diamond. With silver, you get the badges, right? That initiates the green badge. And then the longer you are a member, you will work your way up to the royal purple color. Tim chose that color because the color of royalty.
Royalty. It's royalty, man.
And then you also...
Kings and queens that stay here for over a year,
Exactly. And then you get these custom badges, and they are custom. I literally made these badges on Photoshop with Tim. Tim and I dug into the details. But go ahead and check out these different membership tiers, guys, for yourself. See all the different perks. You will get access to the Bro Time, and you also get access to the Discord too, which is super, super cool. The paid Discord, I should say, the private Discord channels that are available there. But if you want to just check out our Discord right now, maybe you're not interested, maybe you're not ready to make the commitment to join the membership. We also have a free Discord link right here. Look how that's a good looking link. I might even just click that just to see like where it goes. All right, so guys, Binance.us CEO has left crypto exchange, cuts 1/3 of workforce. That's probably something that you haven't heard yet. I was surprised to see this part as well, that they have cut 1/3 of the workforce as well. Binance.us CEO Brian Schroeder has left the crypto exchange. There he is. Whoa. Good looking guy. And you, goodness gracious, I'm sorry guys. And you never would have known.
Good look at his hairline. Yeah.
I mean, a hairline is not what makes the man, Tim. I will point that out. But there is there's definitely a lot to talk about here. The company says that these actions are going to give it a 7-year runway. That basically means, if you cut staff, you don't have to pay them anymore, right? You could put that payment into keeping your servers running for your app. So that's essentially what they're going to be doing here. It's not a good look. It's basically it's kind of raising a white flag. It's like, hey, Coinbase is beating us. All these decentralized wallets, they're beating us. We can't compete, so we're going to have to drop back and punt. That's exactly what this is. And their CEO has left because he's like, look, I want to be associated with a project that's succeeding, and Binance.us is just not succeeding. Let's read a little bit more here. The actions we are taking today provide Binance.us with more than 7 years of financial runway and enable us to continue to serve our customers while we operate as a crypto-only exchange. The company said in a statement, the SEC's aggressive attempts to cripple our industry and the resulting impacts on our business have real-world consequences for American jobs, innovation, and this is an unfortunate example of that. They are dev jobs that are more than likely dev jobs that are getting cut, maybe some community managers as well, but 1/3 of the workforce is now gone. Heads have rolled, and it is unfortunate, but that those people are now unemployed. They'll probably get hoovered up by some other crypto projects, but there it is. That was not something that we expected. It is something though that I tweeted about on the 12th. I see if I can find it. That there was going to be some crypto FUD coming out, but yeah, we'll. No, I've got it here. Because I did call it a little bit. Here we go. Weekly Binance FUD lurking on the 12th. So every single week it seems there's always going to be some Binance FUD. Well, that's going to round out our coverage of the Binance.us. CEO has left. Also cutting 1/3 of the workforce there, Tim.
Yeah, well, I was going to say my only statement there, and we're going to get into TA here in just a second, but real quick, super chat from Thomas L saying, Red Gang. There we go. I mean, let's I know sometimes with colors and gangs that can get into dangerous territory, but love you, Thomas L. I think you're referring to that red badge that looks beautiful next to your name. Thank you for the super chat. When it comes to the Binance.us thing, T-Shroom, what's really sad about the whole thing is that this is the Gary Gensler tactic of having zero evidence whatsoever, but the ruthless attempts to go after Binance and Binance.us. He made it to a place where, the company had to release 1/3 of their workforce. The CEO was like, this is not a place that I can continue to succeed, so I got to step away. When in reality, they did nothing wrong. But again, Gary Gensler doesn't need facts to go and attack people. He's just going to try to take out the industry one way or the other. And unfortunately, the problem is because of all of his lies, because of all of the false accusations, they were able to create enough FUD in the market that people were skeptical. People were scared. They probably weren't even upset with Binance.us. They were just concerned about what might happen. And of course, now we're seeing all the downside happen. So it's really sad that this was a FUD attack, but CZ is going to keep holding up that 4 for the rest of Binance. I did see someone saying comments there now. I guess Binance is leaving Canada on the 25th. So, the FUD continues. And your dogs don't like that.
My dogs did not like that one. They're
Canadian, I think.
They have a lot of sentimentality for the Canadians. Well, before we get into the TA, we do have a factoid of the day. The little elves, this little elf right here is our factoid elf. He likes to make these little factoids. He lives on the internet, so he knows a lot of stuff. Mm-hmm. Let's get into that factoid here. Some of you might know this. I don't know how easy this is going to be, but what European nation did not lock down during the COVID pandemic? Was it?
Gosh.
Tim.
Oh my
Was it
goodness.
A, Ukraine, B, Poland, C, Switzerland, or Delta D, Sweden here? Tim, what are your initial thoughts?
My initial thought is that I'm going to go with Sweden.
Okay.
And I think it partially is because, we found out yesterday that the answer is never D. But now that I've made a fuss about it, your elves might have switched it up on us to make D the right answer. Also, Sweden, I have no real basis for this answer other than, wait, where's Switzerland on a map? I'm not, no, I'm going to stick with Sweden because Switzerland, I'm not still sure where it is. I'm not a European map expert, but Sweden's pretty freaking far north. And I know that COVID did not do as well in the south, in the north because it's colder and it was harder for it to spread in the north. So I'm going to go with Sweden because I think it was a little colder than the other countries, and that's why it never shut down. And I don't know why, but I can't hear you. I don't know if you muted yourself or...
Oh, the dogs. Why don't you go ahead and find Switzerland for us on the map there, Tim?
Yeah. Why the heck am I not finding Switzerland?
It's just east of France. Just zoom in just a little bit. There it is. Boom.
There it is, right down here. All right.
And we're back in the money.
Zoomed out. It didn't pop up on my little thing. So I had to zoom
and that is just the worst, isn't it?
Yeah.
When that happens.
Yeah. It's the darndest.
All right.
Yeah.
I think we're ready for some TA, guys. Let us know in the chat what you think the answer to that factoid is, and we'll cover it at the end of the TA.
Yeah. I think that the elves heard my complaints yesterday about D, and they said, let's get the right answer to be D. Hopefully my logic checks out there. We'll have to find out after TA. Let's take a look. We're on the 5-minute chart, guys, something you will not see very often whatsoever on this channel because 5-minute charts can become completely irrelevant within the span of 30 minutes. However, the reason we're on the 5-minute charts, I wanted to show you guys what happened. This candle right here, high volume, big red candle. This was the 8:30 candle on the 5-minute chart. So this was when the news was announced from CPI data. And originally it did drop down here to about 26,024 or so. But then it has rebounded a little bit. So this is what we're kind of talking about. This news so far has been a little bit of a nothing burger. I do want to see what the rest of the day looks like. Is this partially some of this, like as price started to drop, there's a lot of buy orders already set in down here at 26,000. Is this manipulation or like traders just kind of playing with, a lot of retail investors just going to default think, oh, go ahead and short the market. The inflation came out high. There's a long time today that can still change. Like when you go to the hourly chart, we're nothing but red here in the last hourly chart. So make sure you guys continue to watch the charts throughout the rest of the day. Let's go out to the 4-hour chart though. Take a look at Bitcoin and look at what the oscillators are saying for the next 24 to 72 hours. You do see here after breaking through the mid-level, we're not necessarily overextended here on the oscillator. So we could see, if we end up seeing people respond and say this isn't really that bad of an idea, when we're looking at things like the CME futures tool saying we're still holding strong, that we're going to keep pausing rates. If we keep pushing up, keep your eyes on, again, another top out here somewhere around 26.5. We talked about 26.4 the other day, this wick, and we went a little bit above that. But one of the reasons why taking down our oscillators is if we were to look at this kind of boring region of price action and pull up our fixed range volume profile, load for me here, tool. There we go. Come on. There we go. You're going to see this range right here. 26.5 is the value area high within this boring range. We're using the point of control down here at 26,000, 26.30, give or take, right there where that wick kind of bounced. That is our point of control. It is being utilized as support as we are speaking. Our value area low coming down here at 25.6. So if we were to lose that point of control, you're kind of watching that area down there. But for right now, despite the fact that we got bearish CPI data, it does look like Bitcoin's kind of responding more positively. Let's take a look at the hourly chart and see if it's saying anything different to us when it comes to the oscillators. Not really. There's definitely room to the upside. So despite the bad news from CPI, there's actually a good chance the rest of today could be more of a green day for Bitcoin according to the charts. Let's even take a look at maybe some more factors in here. Let's come out to the still on the hourly chart, but let's look at Fibonacci from this peak back up here to 28.1 down to this more recent bottom. You can also see we're using that level of resistance right there. 26.5 is the 0.5 level. If we keep moving to the bullish upside, watch that level once again for another double top, or even do we make a move up to the golden pocket, up towards that $27,000 range? Of course, that's also the strong resistance from the initial bounce back on the 17th. So I'm not changing my more intermediate term thought that I do think that prices still are going to the downside. Again, next week we will have Jerome Powell, and despite the fact that I think he will talk about continuing to pause rates, it's the way he answers other questions. It's the way he answers what the future looks like that I think could bring a dip in the market. And of course, we could still be waiting for, who knows what kind of news could break that'll drop the markets. I still believe there's a good chance we lose 25.2 with strong, and it turns into strong resistance, and we're heading down. Even though I think we're going sub 20,000, I think we're at least coming down here towards this 23 to 22.3 level for Bitcoin. But it's going to take all the way till the end of October. Remember, we still have half of September left and then all of October before we get to that end of October, early November bottom period. We talked about this a couple of weeks ago, how historically in this period in the 4-year cycle, there's another fresh bottom that comes plus or minus 21 days from November 28th, I believe, or November 21st. It could be somewhere stretchy outside of that, but either way, I still think we have a little bit lower to go in our price action for Bitcoin, but looking a little bullish today. Now, when we're looking at other projects, I know we're going to talk about Ethereum here a little bit later because we had some Ethereum news break this morning. If we were to keep going bullish, keep your eyes on this level right here, this T-box, 1607, probably will continue to be some strong resistance here. If I were to look at Fibonacci levels, even you guys can see we came down, almost came down bouncing off that 0.5, kind of hovering around the 0.3, but that's the 0.236 level. Could be an interesting level right here to continue to watch that resistance. Let's take a look at our fixed range volume profile and our oscillators here. Same thing as Bitcoin. We got some room to the upside definitely this morning. We can continue to push. Even though the candle's moving to the downside right now, we're looking on these hourly and 4-hourly charts is saying like, hey, we got room to the upside. We do not necessarily need to fall. And at the moment, there's nothing other than the CPI numbers being a little higher than expected that says we need to be falling right now. In fact, Ethereum, again, I'll kind of go and cheat the information for you guys. Another spot ETF for Ethereum looks like it is being filed, and this one's by a big player. I'm not going to say who. You got to wait till we get into that story to hear that. But this is another reason why I think Ethereum could continue to move to the upside. If we continue to move to the upside even further, watch the top of that T-box closer to 1650. And then the other thing that we did not do with Ethereum, let's take a look at our daily chart. Nope, did not want to click on that. The other thing we have not done really is retesting this former support level as resistance. If we get a good push up, and I've seen some people in our community, in our Discord kind of talk about this, the same actually technically applies for Bitcoin. We never really got a retest of that. I wouldn't be surprised to see Bitcoin, if we can sustain a bullish momentum, still a push back up to 28.6, former support level. And when it comes to Ethereum, would not be surprised to see a push up towards this blue line and maybe come in the range of 1822. You guys can see between this period of about June 28th all the way over here to August 15th, that level right there, that 1820, 1818, that was some strong support. Have not retested that as resistance just yet. So maybe a bullish push gets us kind of closer to that region up there, and then we see a reversal back to the downside. Kind of what I'm seeing there for Ethereum. Cardano, well, technically speaking, we're still, we have the last 2 days are green. Let's go down the 4-hour chart. Are we kind of red? Yeah, we're not really responding negatively this morning here on Cardano. Let me kind of zoom in here. But I told you guys, watch for this falling level of resistance on Cardano to come back into play. I think we could kind of come back up, bounce back up here towards 25.88, but I think we're going to run into some resistance there. This is not the bullish moment for Cardano. I'm very bullish on it long term still. Still love what they're doing with their ecosystem. But this just is not the time. Again, still looking for 18 cents probably later in October, maybe early November for a Cardano price. Anything else? Matic has some big news this morning. I don't even know if we're covering it here, but I know it's some stuff that's broken here recently. Matic working on some ZK rollups for Ethereum. That could be really, really bullish for Matic. I think it's also going to be helpful for Ethereum. So that's another boost to the Ethereum ecosystem. But Matic doing that, maybe look for a potential boom to the upside coming soon. Let's see here. Let's go out to the daily chart. If something like that's going to happen, we're looking more on the daily chart. Let's take a look at our fixed range volume profile. Let's go all the way down to the bottom, and let's kind of look at what we have here. Some interesting levels. Point of control coming all the way up. This actually makes a lot of sense. All the way up here towards 90 cents. Well, guess what else is hovering in that area? This former support level. Now, we did go back and retest it as resistance already once, but could be another interesting level to go back up there again, especially if we get some big news coming for Matic again with those ZK rollups for Ethereum to help make some things easier. So Matic is another one of those. Let's take a look at shorter time frame oscillators here really quickly, though. It does look like in the short term, last 4 hours, we have one red candle, but we for the most part, are moving slightly to the upside. We got a lot of room to that upside as well. Hourly chart, let's see what it's saying. Got to let this load here for just a second. But overwhelmingly, yeah, I mean, it's a little higher than we saw like with Ethereum and Bitcoin, but that's not screaming to me overbought. We did get an overbought signal coming in, so that is a little bit different. But even that happened earlier this morning around 5 a.m., let's say 6 a.m. or so. So even if we're coming back down, you guys can see in this very short timeline, you got to see it clearer, go down the 15-minute chart. Oh, look at those candles. That's fun. Higher highs and higher lows. Not crazy higher, but technically we keep setting these higher lows. So look for potentially that trend to continue. Even on this 15-minute chart, we did just get a reversal flash as well. So I could see Matic have a small little push up. And then again, this is one of those coins that I like doing the TA on this. I like looking for levels. But if that ends up happening, if those ZK rollups end up happening, that's news that you can't necessarily say, well, the charts were in a bearish position or a bullish position or a neutral position. That's something that would bring a lot of attention over to Matic. Guys, that's going to be it for the TA today. It's 9:36, but we still have a whole heck of a lot of stuff to discuss. But I'm very interested, T-Shroom, and we're going to read some chat here in a second too. I'm very interested to hear the answer to this trivia question.
I bet you are, Tim.
Yeah.
I bet you are. All right, well, our trivia question was, for those who are just tuning in maybe, or for those who forgot about it because you were forgetful, the question was, what European nation did not lock down during the COVID pandemic? The choices were Ukraine, Poland, Switzerland, or Sweden. And the answer was Sweden. Take a look here, guys. Answer D, Sweden. Tim got it. You know, it's a great day for Tim. As the world shut down early in COVID pandemic, Sweden remained open. The country's approach was controversial, with some calling it the Swedish experiment. I pulled up a little bit of information here from the Cato.org. Cato is a libertarian think tank, and in the conclusion section, this is actually posted very recently, August 30th, I believe. They took a lot of information and conclusions from the independent Swedish Corona Commission. And here are some of the takeaways. It seems likely that Sweden did much better than other countries in terms of economy, education, mental health, and domestic abuse, and still had half the excess death rate of the United States. This is a lesson for the next disaster, whatever it is, and whenever it strikes. Harsh pandemic restrictions were often defended with reference to the precautionary principle. Do not take a particular course of action before an abundance of evidence is available. But there was no evidence indicating that drastic restrictions made sense. In times of uncertainty, it doesn't seem like a precaution to put all your policy eggs in one basket and add to the burden of a health emergency by undermining communities, the economy, and education. So there's a lot more. I'll put the link to this entire article from Cato in the chat right now.
And people have a lot of opinions here. Like I'm not going to say my opinions on it, but I think even like let's just play the advocacy of saying like, all right, let's say that this was really rough and really dangerous, and people need to be. It's a colder country. The reason I went with it, it's farther north. It's colder countries. We just even know scientifically here in the United States, COVID did way more damage during summer months and warm months than it did during cold months. So it also makes sense. They are so far north. That helps a lot when you have that colder weather kind of helping fight it. I should have also phoned a friend. We should have just asked Bedridden in chat since he was there. Although, have we seen Bedridden's name here recently?
No, he's not watching live.
So I couldn't have phoned a friend. All right.
Yeah.
Well, let's jump in here. We got 175 people watching. Thank you so much to each and every single last one of you. I know there was a couple of you asking for some other. So Joey Ferrano said near or dot. We'll try to do near or dot TA in the next couple of days, but thank you so much for being here. Smash the like button. Even though there's 175 of you, we only have 85 likes. which is a crazy low ratio. We are usually operating at a way higher ratio of likes to viewers. So help us out, smash the like button. And if you're new, smash subscribe as well if you're loving the content. With that said, T-Shroom, we got some more stories to cover and a lot of them. So let's not try to rush it too much, but let's try to work through them.
Keep it moving. I hear you. You. Well, GS said Cato is a good organization. I completely agree with that. I almost went and worked for him, actually. And then my mother, Susan Trum, said, this just in, the manhunt is over. And that is a story we'll begin with. Maybe some of you have been tracking this. Maybe some of you haven't. But escaped convict caught after 13-day manhunt in Pennsylvania. Ladies and gentlemen, they got him, it seems, according to the Washington Post, which is fairly reliable for these kind of headlines. All right, let's go ahead and dive into some more of our crypto-oriented stories, though. TON coin surges 13% after Telegram integrates blockchain Web3 wallet. We covered this a little bit in the intro, but let's get into some of the details here from the article. Telegram's chief investment officer, their CIO, John Heyman, along with the TON blockchain team, announced that the TON Web3 wallet has been officially integrated with Telegram at the Token 2049 conference in Singapore on Tuesday. So that was a pretty big conference over there in Singapore, and they had that big
a lot of people. A lot of people. I saw Rand was over there. I saw Scott Melker was over there. I saw some pictures. Good amount of people. Are the altcoin twins? Are the altcoin twins over in Singapore? Yeah, the altcoin twins are over in Singapore. Big grouping. A lot of people out there.
Yes, Singapore, the Switzerland of Asia. Some people consider. So
I've never once heard it, but we'll go with it.
It's okay. Well,
yeah.
Absolutely. Well, we got another big story here. This one's actually pretty exciting and a little bit of a head scratcher.
We teased it. We teased it during ETH TA. Here we go.
That's right. NASDAQ files with the SEC for a Hashdex mixed Ether ETF. Now, the mixed here, this is blowing my mind because this is the first time I've ever seen this. It's not a spot. It's not a futures. It's a mixed ETF. Tim, have you heard of that before?
I hadn't until a couple weeks ago, but a couple weeks ago, that concept was presented with a mixture. I don't know what's on this mixture, but there was other ETFs being proposed to mix Ethereum and Bitcoin. I saw Bitcoin and gold mixed ETFs.
I've seen those, yeah.
So I'd heard of them more recently, but not for like years or anything.
Yes. All right. The NASDAQ Stock Exchange filed with the SEC to list an Ethereum ETF from Brazilian asset manager Hashdex that wants to hold both spot Ether and future Ether's contracts. So very interesting there. I mean, that's about it. I mean, we could drill into more a little bit what Hashdex is. They cover that more in this article, but
that's different. So this one's not a mixture of several different projects. It's a mixture of futures and spot.
Right, which is like why.
That one I have not heard of. That's weird.
Yeah. I'm not exactly sure why, but yeah.
Yeah, I don't know the advantages or disadvantages of that whatsoever. Mm-hmm. It would seem like on the surface, it would seem like, why do you want to mix in the futures detail when you can just do the spot? But I don't know. Like, I mean, maybe futures gives a little more security, where a spot is a little more dangerous. I don't know. Like, maybe so you mix in a little safer investment with some more risky investment.
Here you go.
Does it say it?
Later in the article, it actually gets into it. So by holding Ether futures contracts and cash in addition to spot Ether, the fund reduces its dependence on the spot market, thereby mitigating concerns about potential manipulation in unregulated Ether spot exchanges.
Yeah.
So
so that's fun. Look at that. I hit that right on the head. Hit that right.
Yeah, you did.
It's the limiting risk. Okay, interesting.
Yeah. Imagine that, a financial instrument.
I should start a YouTube channel where I talk about this kind of stuff,
man,
on the daily basis.
Oh, you should. Yeah. It would be a smart move. Well, unfortunately, there have been some not smart moves, and that's people buying things they can't afford. And that is resulting in what the Kabinski letter is calling auto loan delinquency rates. And they are now at their highest level since 2008. Guys, does 2008 ring any bells for you, Tim? Is that a significant year in American economic history at all?
I think I lost a tooth or two that year.
Okay. Yeah, we were pretty young then, but since
I was kidding. No, I would have been like 14. I don't think I lost any teeth. That's maybe if I got hit. Maybe I got punched in the face and lost a tooth or so.
It's possible. I couldn't ever see somebody getting mad enough to punch you, though, Tim.
Yeah.
All right. Since the Fed started raising rates in March 2022, auto loan delinquency rates have nearly doubled. For Q2 2023, the auto loan delinquency rate in the U.S. jumped to 7.3. Wasn't the mortgage rate 7.3 today, adjusted up to? That's a coincidence, guys. Not really anything to conclude there. But this is up from 6.9 in Q1 and above pre-pandemic levels. Moody's said that the auto loan delinquencies will hit 10% in 2024. Consumers are feeling the pain of higher rates. And then here's your auto loan delinquency charts to serious delinquencies approaching 2008 levels. So back in 2008, we were up here, right? No bueno. And then we are approaching those rates here. So, and the Fed started raising rates. That's this vertical line here. So you can see that indeed the delinquency rates have skyrocketed. They've eclipsed these. Goodness gracious, I'm sorry, my auto zoom. They've come up and penetrated through what this would have been resistance here, coming over and gone through, and now, I mean, flipping that into support. Classic. So what can we learn from this, Tim? Is this good? Is this bad? What does it mean here?
I mean, people are going to lose their cars, ultimately, is what's happening. Delinquency rate, they're not making their payments. Just add this to the whole list of, we talked about this yesterday. People's spending is still going up, yet their income is coming down. We're going to see people, we talked about this yesterday, the student loan debt is going to start turning back on. So now people are going to have to, they're still making less money. The dollar's still being inflated. They're now going to start paying their college loans. They now, they have not been paying their car payment. They're going to start getting their cars repoed. And to make it all worse, what's going to put even more pressure, we talked about this morning, T-Shroom, is if you share my screen, from CBS News, not the most reliable news source, but I trust them on this one. As you said with Washington Post, auto workers could go on strike within days. Here's what you need to know. So Ford, General Motors, and Stellantis. I didn't know that Chrysler changed their name to Stellantis, honestly, but formerly Chrysler. There's 140,000 members of the United Auto Union that are potentially going on strike. What does that mean, guys? Well, that means they're going to stop producing new cars. Well, all of a sudden now that means the demand for used cars is going to go up. So all these people losing their cars who still need to drive to work, it's not like Ubers are going to get cheaper. They're still going to want to try to find some form of transportation. Used car prices are going to start to skyrocket. I think we're about to see I was about to say something that I don't want to say. I think we're going to see an increased amount of bicycles on the road, T-Shroom. And you'll never know, especially if someone works in a business office. Are they coming to your door to knock to tell you about somebody, or are they just on their way to work? You won't know, especially if they're wearing white shirts and black pants. That's all I'm going to say. I was going to say something else, but I'm just going to leave it that.
That one went right over my head, Tim. I'm sorry.
Some people in chat will understand.
Okay. Well, yeah. I do have, this is the Manheim Index here, guys. Manheim Vehicle Value Index. This is the August print. You can see here, this goes back to 97. So, I need to move this over. Can't see it behind Tim's beautiful self. Here we go. Now you can see it. All right. So you can see the Manheim Index has put in a lower low and a lower high. So that's good. It's trending in the right direction. Manheim Index, again, is the used vehicle market, essentially, in America, probably North America. But anyway, it's coming down, and it's reaching probably some resistance here, but is looking to go lower. Tim mentioned something that would potentially decrease the supply of new cars. I mentioned something that would actually increase the supply of new cars into the market. Remember, because people have been saving cars essentially, and now they're being forced to sell. So the bank's like, hey, you can't make your payments on those cars, on these used cars. Give them back, and we're going to put them into the market. Presumably, it's not going to happen overnight, right? Because banks only have so much staff to be able to make things happen. But those cars are going to get returned into the market. So now the question is, which is a bigger phenomenon? Is it the banks putting new cars into the market, or is it the strikes that could potentially pause minting of new vehicles into the market? So that's the question. Yeah. Those are two important forces. My guess is that the repos are going to be a much bigger force because that's going to happen at like a million scale versus only like maybe a pause of thousands of new vehicles hitting the market. That would be my guess. I mean, it could be
thousands and thousands of thousands. I mean, and those are also, maybe you see increased purchases of like Japanese and German vehicles, whatever, because what we're talking about is American-made vehicles going off, but it's still going to put pressure on more. It's going to, I think, I hear what you're saying, because the repo is going to put more cars into the used car market, so we will see a higher supply, but I still think you're going to see a higher demand, especially, again, people being repoed, people not having access. There's certain people just want to buy American vehicles. They do not want to buy foreign-made upgrade vehicles. So you're going to say the demand go up as well. And my expectation, especially knowing how people just operate with this, they're going to use this as an example to be able to sell their cars at higher levels. My expectation, T-Shroom, is that we will see the cost. I think the demand will outweigh the supply. The cost will go up on used vehicles, and it's going to be pretty rough again because the other thing about it, if someone's getting their car repoed and they're now starting to turn back on paying their credit card bills and paying their student loans, they're not looking for a used vehicle for $10,000. They're looking for used vehicles for like $2,000, $3,000, $4,000 at the highest, and it's going to be a very high market asking for those vehicles, and not as many of them on the market. The price is going to go up, and people are not going to be able to find them. Like and I've seen that happen. Like again, not that we've seen every single situation, but my family growing up, my family was that family who my dad's philosophy is never buy a car for more than $5,000, ride it till it's dead, and then go get another one. But I remember there being times where we'd watch this, like we needed a car and we couldn't find one because like the only cars like $3,000, $4,000 were literally like you had to go buy it and then go put another like $3,000 into the engine because the engine was destroyed. Mm-hmm. I think we could see something very similar happen again.
Yes. And we've drilled in very, very close to try to figure out what might happen here in the used car market. By the way, this tweet was brought to us by Army Piper. He sent this to us this morning. He brought this to our attention. So it's important. Interest rates on used cars are above 10%, and the median monthly payment on a new car is at a record $750 a month. That's insane, guys.
Ridiculous.
We have high rates with rising prices, a rare occurrence. Basic necessities are becoming unaffordable. And then Crypto Trades made an excellent point saying electric bikes, that's the new thing. That's true.
Yeah.
Yeah.
Taylor and I have legitimately talked about selling one of our vehicles and me getting like a not anything high powered, but a motorcycle, just get to work and back. And then whenever we want to go other places, I'll just we'll just have the one car. But
yeah,
we haven't pulled the trigger on it yet. It's not official, but I'm leaning in that direction.
Well, it's a nice time to work from home. I will say that, and that's what I do.
Nice. Yeah.
I'm going to keep even though it's a gas guzzler, it gets 18 miles per gallon. I'm going to keep my car because it's paid off. You know, it's an older vehicle, but I drive it maybe to the grocery store, maybe like once, twice a week, and then maybe to a restaurant another once or twice. So 4 times I'm driving it, you know, but it's not a daily commuter. That's the big thing. I'm not going anyway. You guys get the idea. Yeah. Probably not in the same situation I am, but maybe you are. If you're retired or if you work from home, it's a great time to be doing those things because you're not having to spend money on gas or depreciating your vehicle further or incentivizing yourself to get a new vehicle, right? If you're commuting every day, 2 hours, I'm probably going to go ahead and splurge on, something at least 2018 so I can have all those nice amenities and things like that. But if I know we're spending a lot of time on this, but if your air conditioning is starting to not be cold anymore, don't get a new car. I found out that it's an easy fix. You literally go to Walmart and you get a product that's like $40. You plug it into your engine and then you just turn it on and it just fixes your AC. If that's the problem, if your AC needs to be recharged, is what it's called. So
you're talking about like, okay, we'll talk later.
I'm recharging the coolant.
All right. Yeah, some of you are putting coolant in the vehicle.
Yeah, some of the auto mechanics in the audience are like rolling their eyes because it's the easiest thing ever.
Yeah.
But I didn't know about that. And some of you are learning that for the first time as well. So anyway, we're having fun here on the Investing Bros. And looks like we got a lot of time here to kind of chat it up.
Okay, so yeah, that's all the stories we have so far?
We've gotten through all the stories, and I don't see anything that's really breaking right now.
Yeah.
So yeah.
Yeah, price is kind of hanging tight. Nothing crazy. 26,136 for Bitcoin. So kind of similar to where we left it this morning. We did get over 100 likes. So we can start going through chat here. Make sure you guys put some chat in there, the interesting questions in the comments, but we'll read some names here. Shout out to Dan D. You can go back to Brocam T-shirt. We can shout out to Dan D. Rin Tin, saying Freon, not coolant. There we go. Renton works on vehicles. He knows what's up. Crypto Trades is here. Of course, we've read his name. Matt C saying electric bike time, Tim. Well, he said Investing Bros. I don't know why I said Tim. I'm terrible at reading, I guess. Eric Wallen, of course, is here. Yeah, because I see what he's responding to. Shout out to Silverman183, the Kid Co MN. Funny comment. Not going to read it, but funny comment. Silverman183. Who else here? Gia S with the blue wrench is here saying that's crazy. Car payments are almost a house payment. You know what's nuts, T. Sherman? I think I've talked about this with you. I don't know if we've talked about this on the show, but I was doing some digging, and I found it was a tweet somewhere. Yeah, no, if I was digging, T. Sherman, I won't. Okay, anyway, we're gonna keep moving on. So if you go back to what the dollar was worth back in 1930, the peak of the Great Depression, and you compare it to things that are happening right now, the people during the Great Depression had it way better than us. It was like their average pay was only like $1,300 a month in equivalency to today's money. But then it's things like their mortgage payment was something like, or a house. It didn't say mortgage payment. A house in total was only like the equivalency of today being like $80,000. And then a car was like a grand total of like $700. Gasoline, when you can't count for inflation, everything is like $1.15. So it's like they got paid $1,300, but if you were to move it up to today's median for today's like 55,000, it was pretty much saying when you look at the percentages of what they had to spend money on based off their income compared to today, the Great Depression had it better than what we have today.
I found it because this is something that Kelly reposted a video. Let's watch.
Oh, this isn't what I saw. I saw something in text form.
Well, why don't you just talk over it then so we can't hear it?
That was my plan, but now you're ruining it. Okay.
Heard a new term on TikTok today that made me stop in my tracks.
We are living in the silent depression.
This guy believes we are not just living in worse than the Great Depression, we're living in the silent depression. The average annual income in 1930 for an American individual was a little over $4,800. Sounds like nothing, but if you adjust that for inflation, a little over $4,800 a year in 1930 is equivalent to almost $85,000 annually for the average salary for one person. Right now, the average annual salary is $56,000 a year. We currently are making less than the height of the Great Depression. In 1930, gas was on average 10 cents a gallon. That would be about $1.73. In case you haven't filled up your car lately, average cost of a gallon of gas is $3.55. To buy a new car in 1930 would have been about $860. It's worth about 15 grand. The average cost of a new car today is $48,000. And of course, the most coveted aspect of the American dream, being able to buy a house in 1930 cost about $3,900, less than $70,000. I spend way too much time on Zillow, so maybe this isn't surprising to me, but the average price of a home in America today is $416,000. How could we be living through worst cost of living and wages than 1930? And no politician, no media outlet, no one is talking about it.
That's Bidenomics. It's about growing an economy by strengthening the middle class.
Yeah, good point. He's talking about middle class. Army Piper says, no, Tim, poor people in the Great Depression were living in mass shelters and dying of starvation. 2023 poor is not the same type of poor. Army Piper, you are right. It is much better to be poor these days than it was back in the 1930s. But I'm talking about people like in the middle class. Yeah. You do have a job. I will say the only thing I will say, it still doesn't add up to it all. But this is a conversation Taylor and I were having, not Taylor T. Shroom, Taylor, my wife. Taylor and I were talking about this the other day. Back in 1930, it was also it was very rare. I'm not going to say not impossible. It was rare to have both the husband and wife working. It was way more common to be a single income household where the wife stays home to take care of the kids and the house and the man's single income. So technically speaking, that average $56,000 salary, most people, you'd probably multiply that times two because both the mother and father are working. And so it comes out over 100,000. But that's even if you were to make that argument, it still is ridiculous. The difference in price action of what's happened there. But Piper makes a good point. You're right. I think there was higher unemployment in that time. And absolutely, if there was not the social, things and laws that would help poor people kind of figure out and get good living situations.
There's a ton of details that are like what she did is she illustrated just a nice broad brushstroke of truth, which is talking about the purchasing power of the dollar is just so weak because wages have not really kept up with inflation over the years. But I mean, there's so many buts that you could say about that video, which is we have way more expensive things now. Like everybody has an iPhone, everybody has a car, and everybody has health insurance. Everybody, there's like all these different new costs too to take into consideration. So it's not a one-for-one comparison by any means. But when you look at the real estate prices, that is a one-to-one comparison. It's the same exact product. So there's a lot that goes into it, but ultimately it's bad. It's bad, and it needs to be corrected. And our government is not in a position to correct it.
Yeah. Ultimately, the point of this is not to say we wish we could trade places with 1930. That's not the point. The point is to say that if you were to go around the Great Depression, the times where everything actually was okay, that is the time that's like economically we were doing so much better than we are right now. And it's one of those things like it is hard. Like, it's one of those things that I remember as a kid growing up thinking, if you made 6 figures a year, you must have so much money. And now it's to the point where if you have 1, 2, 3 kids, you will not make it on less than 6 figures unless you're literally living in a way too small home, driving a really crappy car, and you as a family don't do anything other than kids go to school, you go to work, and then you eat beans and rice every single night. Without higher 6 figures, it is very hard at this point to raise a family. That's why, when people now say they're millionaires, which by the way, I'm not a millionaire because I'm poor. And, that's the nature of it. That's why I trade cryptos, because I need to get out of being poor. But, I'm nowhere close to a millionaire, but it's really not that impressive, T-shirt, anymore to say, oh, I'm a millionaire now. It's like, well, until you become more like a 10 millionaire, you really don't have that much money. And especially as we continue to see it degrade over and over and over again. That's why right now I have a whole heck of a lot of my savings in crypto. I joke about this. We got to wrap up after this. I joke, though, when I got in here literally 3.5 years ago, T-shirt, when I got into crypto, I was told, which is great advice, don't invest more than you're willing to lose. Well, the same advice can be given for your bank account now. When you're looking to put money into your bank account, into your savings, your advice should be, well, don't put more in there than you're willing to lose, because it's a very real danger at this point. And it's crazy how only 3.5 years have changed that kind of investment advice. But that is all the time we have today, guys. It is 10:02. We ran a little bit over, but we had a lot of fun, covered a lot of ground. If you guys like this episode, smash that like button. We will see you tomorrow morning, the same time, same place. Make sure to tune in tonight, 5:45, for the X Spaces for the Investing Bros. Those are always a blast. You guys can come in, ask questions, give your takes on the market as well. With that said, though, you guys have a fantastic day. See you tomorrow.
Tryna make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shrooms news, got your word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Tryna make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.